Hello and welcome to the Regulation Asia Awards for Excellence 2020 video series. I'm Elliott Gotkine. Now, back in December, I was happy to be invited to host the ceremony, and in among all the gongs was the award for Best Solution in Initial Margin Compliance. It was won by TriOptima, and I'm delighted now to be joined by the company's business manager, Neil Murphy. Neil, congratulations again on the award. Great to see you. How's everything in the UK?
Yeah, it's really good. Thanks very much for the award, first off. And good to join you in a conversation today, Elliot.
Well, great to have you with us. Now, I'll get stuck straight in. So look, in April 2020, the Basel Committee and IOSCO announced a one-year extension for Phase 5 and Phase 6 firms to meet initial margin requirements, commonly referred to as UMR or Uncleared Margin Rules. What's the situation right now, and is it likely to change further as the pandemic, we very much hope, abates in the face of vaccination campaigns around the world?
Yeah, back in spring 2020, regulators took very, very swift action to delay the final phases of UMR by extending the deadline by 1 year. Obviously, there was a lot of uncertainty over the market at that point, record volatility. So this was broadly welcomed by firms who were in scope. It gave them extra time, which is very helpful. And obviously, this wasn't the first delay to the rules. Back in 2019, regulators had already split that final phase in two, giving smaller firms an extended period to comply. So with two delays already in place, I'm pretty confidently say at this point that we don't expect to see further delays from regulators. For any firms really thinking about or hoping for a delay, I really think they should be focusing their time and their effort really now on trying to comply ahead of September 2021 if they're Phase 5 or September 22 if they're Phase 6.
Right, and as you say, those are the dates that these new regulations come into effect, September the 1st, 2021 for Phase 5 firms and then Phase 6 firms a year later. So just how prepared are these companies? You'd think perhaps with the delays they're more prepared than they otherwise would have been, but how prepared are they for compliance, and what key challenges remain? Yeah,
like you said, we would have hoped, given that the delay came quite late in the day last year, Phase 5 should have been well advanced with their projects. I think those firms really face, particularly Phase 5, they face three options. Continue working towards the original September 2020 deadline with no change in their timing. They could continue with their plans, perhaps at a slower pace, or finally they could put their projects on hold and pick them up at a later point. TriOptima have been working with a lot of Phase 5 and 6 firms, and I think a small proportion of them continued working towards the old deadline and ignored the extension, so to speak. For them, perhaps they were well advanced. They just wanted to complete those final steps. But some of them, they had resources which had been allocated and they didn't want to lose them. And obviously they didn't want to lose momentum. And for some of those, they've really gone as far as, completing all of the project steps and having an effect, a soft go live, where they calculate their IM daily. So they're really going to be well prepared ahead of September 2021. I'd say a fair number took good advantage of the delay and put their projects entirely on hold, choosing instead to pick them up at a later point. But I'd probably say the largest proportion of firms, they continued with their projects, albeit at a slower pace. This gave them the opportunity for better analysis, to test with vendors, to analyze their portfolios, to assess the IM, and really to understand the broader impact. So hopefully they will be in a better position come September 2021. And in terms of those key challenges that remain, I think this will change for different firms. But I think selection of an IM calculation option, selection and implementation of an IM calculation tool or system is really the key priority for firms at this point. And obviously there are associated tasks and challenges around collateral, connectivity to custodians, and also signing of IM docs. So there's definitely some other key requirements that firms should be focusing on.
And it does sound like these final two phases are different from earlier ones. What is the difference, and what are you as a company doing to help clients address them?
Yeah, I think the first is probably quite obvious. Across the first 4 phases of UMR to date, approximately only 75 firms have come into scope. And as you mentioned, maybe 300 are due in scope in Phase 5 and maybe 600 or more in Phase 6. So volume is a key difference. But also if we look at the smaller firms coming into scope, several of those perhaps maybe don't have the same tools that would make compliance easier. And I'm thinking here about their existing collateral processes around VM. So they may be less likely to have automated collateral workflows or to use industry standard services such as MarginSphere, TriResolve, or even to have Swift and custodian connectivity. So the impact for them will be much larger. But I think a key differentiator or a key difference for phase 5 and 6 is that they can take advantage of regulatory relief that didn't exist in earlier phases. And now this allows in-scope firms to potentially defer some of those steps, such as putting in place legal documents or opening custodian accounts. So they're the key differences, I think.
Okay. And judges, just going back to the award ceremony, of course, judges praised the TriOptima solution as one that provides an end-to-end initial margin compliance solution with powerful features, a user-friendly workflow, and significant automation, easing the compliance burden. Can you elaborate a little bit on how you're able to increase automation and efficiency in margin processes?
Yeah, it's really nice to be recognized in that way. So thank you very much, Elliott. And at the core of what TriOptima do, we seek to deliver services which help firms both to mitigate their risk, but also reducing the costs associated with OTC derivatives. And automation is very much at the core of this. And to anybody familiar with the margin process, they will recognize it's got multiple interconnected steps, and they're often very manual. So as we've evolved our IM solution, we've really focused on automation to ensure that the process is easy for users to interact with. But it also removes the need for complex deployment or even the need to connect multiple systems together. And that's really, really important for us. Effectively, implementing our UMR solution, we simply require a trade file from clients. No complex overhead in terms of mapping or format. We will take that file, calculate sensitivities, calculate initial margin using SIM or schedule methods, and then provide an STP workflow to enable IM margin call processing and also settlement. So it really is an automated end-to-end process.
And what kind of traction have you been getting in Asia and other markets? Perhaps you've seen a boost after the award.
I hope so. I'm happy to say we have seen great demand for our UMR products globally, with strong traction in Asia and in particular Japan. And that perhaps reflects that across phases 1 to 4, Japan has been the market where the most firms have been in scope in Asia. But I'd say regardless of a firm's location, when firms are looking at solutions, they tend to have similar requirements and priorities. Obviously, they want tools that will help them to comply with the new regulation, but they also want to adopt new industry standards which are emerging, whether that's around electronic messaging, reconciliation, negotiation of legal agreements, or even collateral settlement. So, and I think also something else that's becoming more important is implementation. So firms, they are retiring legacy systems, manual processes, and they have experience perhaps of 6-12-month implementation projects for older tools. So they want to be able to implement these tools quickly, and that's something that's really central to the TriOptima offering.
Okay, and with all the challenges being faced by institutions, many RegTech companies, such as yours, see opportunities. How do you actually differentiate yourself from the rest of the field? I'm assuming it must help being part of a much larger company in the form of CME Group.
I recognise, we're identified as a tech company, but I think it's important to maybe distinguish ourselves. We've been around for more than 20 years, so I don't think it's always appropriate maybe to bundle us with some of the startup firms that exist in this space. And I think that's important because when clients are choosing a provider, they're looking for long-term partners. It's not just about meeting today's regulation or today's technical challenge. So I think, when you're looking at a partner, firms want vendors who can grow and evolve with them. And definitely at TriOptima, we can demonstrate that. In TriResolve, we started by solving the industry challenge of portfolio reconciliation. We've since grown that across other products out of non-cleared into cleared, repo, sec lending, etc. And then built a collateral management workflow on top of that, extending that with our risk and valuation tools to offer a holistic IM solution. So it's about extending our offering, and we think that really is important and is a little bit different to some of the startups that maybe in the capital space.
And just finally, I mean, what other regulatory challenges are you working on helping the industry address over the next 12 to 24 months? I know LIBOR transition is one big thing one big challenge facing institutions. But what are the ones that you are focusing on at TriOptima?
You're right. LIBOR transition is a huge industry task over the next couple of years. With our TriReduce service, we will be helping firms transition their legacy risk into alternative benchmarks via compression and use of risk replacement trades. But if I look at other challenges close at hand, I expect wider adoption of our TriBalance service as firms seek to optimize their initial margin obligations and reduce the cost of funding, which might be more interesting to phase 5 and 6 firms who are more cost sensitive. And if we look into the credit risk space with newer requirements around SACCR and CVA, we expect to see more demand for our risk and valuation services. But personally speaking, I'm still very much focused on helping clients meet the collateral challenges they're facing around UMR, but also around moving to adopt new technology, retiring legacy processes, and embracing automation. As I said before, the collateral process can be very manual, and what we offer is the ability for clients to retire those processes, to move to an STP approach, and to focus on dispute resolution.
Right, sounds like an interesting 12, 24 months ahead for you and the rest of the TriOptima team, and we wish you the best of luck, and hopefully see you at this year's awards later on in this year. But I'm afraid we're out of time, so really just want to thank you, Neil Murphy, Business Manager at TriOptima, and congratulations once more.